I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
There's green arrows around the world as China tries to stabilize and Europe has another strong day. U.S. markets had a second day of snapbacks and second quarter window dressing seems to be underway. Traders hope to be nimble this summer. I'm Brittany Umar and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So futures are positive this morning as window dressing seems to be well underway. And now the question is, Scott, how much room this market still has to bounce?
Well, it depends if it's Caesar dressing or if it's ranch dressing. So one's a little, spicier than the other. But anyway, with that said, we talked about coming into this week, can we find some kind of pivot low? Can we then trade off that low for a potential markup into the end of June, the end of the second quarter, so people could show some performance? So you look here at the chart of the SPX and you will see that, obviously you have a broken trend. This is the trend that's been intact since early November. This was that elevated trend line that broke right around 1640, and then here's your pivot low. The pivot low came in right around 1560, above bigger support down at 1540. So with that said, question is, how much can it rally? So yesterday it took back the 100-day. If today it gets above 1593, I think that you're going to get some big resistance somewhere around 1603. And if they want to push the envelope a little bit to test a 50-day, that's 1618. But overall, I do think with today's open, 2/3 of the dressing has been spread.
Oh, okay. Well, good to know. But not participating in this is the metals. They continue to get crushed. We're seeing gold and silver prices drop to levels last seen in 2010. And a lot of this pain could have been avoided. So let's start with gold. And what are ways we can still make adjustments going forward?
How many times do you think we've talked about adjustments with gold in the past 3 months?
Almost every day.
Quite a few. Okay. And the problem with gold or gold bugs is that they have opinions. They say gold has to go up because of this. Gold has to go up because of that. So when it doesn't go up because of the reasons they think it's going to go up, it typically goes down. That's why I like to talk technicals with gold. And we've talked about these adjustment areas. Adjustment areas on a lot of different time frames. And if you look here at gold, you will see one of those adjustment areas was right here. Remember this little triangle? Here was your top after a parabolic move that ended the run. Here was resistance coming across. So right here you didn't know. Would the trend resume to the upside or to the downside? So right around here, I think I was actually thinking upside then. I was long around 160, 161, and boom. It broke below that, got out of the way, and was not stubborn. So we said for the next round of people, okay, just say you were stubborn, you don't think you're an intermediate player, you're a macro guy. Well, this was your macro trend going across. This was your action area when it broke below. That was right here, okay? You had some time to get out around 148, 149 for that big move down, which created a reactionary pivot of 130.50, which was your next spot. You had a bit of a bounce back, you had a retest, you had less of a bounce back, closed on the lows. This was the day that I went out short the GLD, and I think a lot of people on the side made some money. And then here, no reason to own it yet. If you tried to own it, you're anticipating something because it gave you no signs except for, it stopped going down a little bit. So anyway, it's opening lower. You go to your monthly chart now. I did this in the Express. I think that right around here, this is 113. This is, 115.20. This breakout pivot here was right around, this is around 116. So anywhere between, Brittany, I think 113 and 117 is at least a spot to cover again. And maybe there's enough blood on the street here, and we haven't tried to find the cute long. I haven't even done a level versus level here, besides a micro trade here and there within a range. But this could be a spot, to start really looking at it, or at least maybe look at silver, which might be easier to grab your hands around.
Right. So how can we still make adjustments with silver?
Silver has been just as battered, just as bruised, just as dull, so to speak. So with that said, with silver, I would look to a spot there. So with silver, you look at the chart here. I'll just go right to the long-term chart. Look at this. First of all, remember this time period. I remember when, this was the world's obsession as it went parabolic, and we were all trying to short it around 45. Imagine we still had that. Anyway, with that said, you have a downtrend that came into play that never broke above. You had a support here if you didn't sell alongside here, which last way out was right around 26, and now look where it's coming into. Close at 1891. It's opening below 18. I do think you have a level back into this 1743 area. So anywhere between 1743 and 18, I think you could try, definitely in my opinion, you cover some here. But I also think, you trade a level versus a level, you might be able to find a cute long for today even, or within the coming sessions that I think, it's a better buy here versus selling it now down at 17.5-ish and change.
Well, financials were an area of strength yesterday, and so you've actually found some ways to play some of the banks, so you think this group still has room to run? Well,
with the market bouncing, you figured what was strong, what could, want to be dressed up a bit for performance, so I chose a few of the banks, and they actually bounced back. So I guess the first one we'll talk about is Goldman, which helped to lead the market higher way back when we were in a stronger trend. So with that said, you look at the chart here, and, it did retest this, this is the XLF actually, so while we're here, you could see how this was the 100-day, so it held above the 100-day, which the futures went below the 100-day, so a little relative strength. Here was your bounce back. So really for the XLF, 1943, this one right here is about 1922. So if you were playing it for a snapback, this is your snapback to take the trade. Some people might even, try and fade this or short this into potentially a gap fill, which could happen. I'm just not sure if today is that day. So for me, I come in long some financials. I'm going to be trimming and trailing some into strength.
How about Bank of America outperforming the market yesterday, 3% of gains?
Yes, this one, I had two different plans for Bank of America. One was I'm like at 1240, I'm a buyer. And then I went to 1240 earlier before I thought the market was ready for a bounce. It went to 1239, bounced back, and then broke that low. So with that said, I got in yesterday a little late, okay? This was the first time it hit the 1240, and the reason being, remember 1240 we talked about, this was a really nice breakout area that I remember playing. So it first time got there, and it actually held, okay? And then what did it do? It broke below it. So, we talked about this little head and shoulders pattern on a micro basis. So it's actually interesting the way it worked out because, the high here, just say was, what was that high? That was $13.99. Some people would say the neckline was about, 13, so about $1. So where did it go down to? It went down to $12.13, almost $1. So anyway, with that said, yesterday when it was hovering around 1240-ish or 1245, I did get involved. I will be selling some of it up into the 1280s, and maybe it gets back to retest this. And short term, I think I'm going to take the trade off. I don't think that low is the pivot to stay in for the rest of the year. The same way, I'm not sure if the lows are in for the summer. So I'm treating this as a window dressing rally, 2-3 days. Be nimble, and then figure it out. And if we hold up and we build a base and continue higher, then maybe I'll go back to a portfolio approach. But my portfolio approach that I'm coming in with today will probably leave today.
Well, we also saw traders turn to more regional banks that don't have that risk to the Eurozone. We saw stocks like Zion's get lifted yesterday.
Yes, and this one seems like relative strength. I got to give it to Taylor. She's on my desk. She's been tweeting about it, about how the regionals could be a good place to be. Look at this chart, very firm, above all the moving averages, not like what I just showed you with some of the other banks. Breaking higher and probably in this futures move up in new highs. Congratulations, Taylor. Congratulations for people who look for relative strength. This has been a name that looks really good and could extend a little bit, but again, hard to chase at 29-ish if it gets there, but at least you could see that there are spots that can go if you look from the right way.
And M&T Bank as well, another regional, gained about 2% yesterday. Should this be on our radar for today?
Yeah, and this one's breaking out. Look at the size of this channel. I've never traded this, I don't think, ever. But if someone showed it to me yesterday, I'm like, wow, look at this regional bank. Above all the moving averages, clearing this descending channel, almost at 52-week highs. So that kind of shows you also that perhaps that this retracement or the correction that we've seen overall is not going to get much deeper. Okay, but we shall see. As of right now, they are letting some things continue higher, and typically in a bearish raid type tape, they don't let banks like these, continue.
Well, after some good data yesterday, homebuilders were another area of strength. We're going to go in the trenches with some homebuilders right after this quick commercial break. Stay with us.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
Well, homebuilders showed relative strength yesterday after new home sales topped expectations. Let's take a look at the XHB first, which gained about 1.5%.
I think this will be a good gauge to see whether or not this is a rally to be sold, or if we can get more strength in that pivot low that we've just seen hold. And if you look here at the home builders, this trend that we've been talking about for a long time has been intact. Held here, held here, held here, all the way here. Remember this little negative pattern here? It held. Then finally, you have this left shoulder, this head, this right shoulder, where for the first time, it broke below and tested the 200-day. Hasn't touched the 200-day in almost actually over a year ago. So, sometimes, this was an opportunity here, and then it wound up building and went again. So at this point, we want to see if it's an opportunity again. I don't love the action here, considering you had a gap up, close on the lows, below the trend line. So, I wouldn't be out chasing this, a group. I would wait to see, a little bit more time. But ultimately, if it were to gap up and hold today and then get back above this trend line, do a little sideways action, maybe that'll show us that the market is a bit healthier. But if it gets neglected again and starts heading lower, you'll know that this was a dressing rally, and there's going to be some more volatility this summer.
Right, so maybe we don't get excited just yet, but stocks like Toll did regain some upside momentum, but the gains weren't that impressive. I think it was about 0.3%.
Yeah, you look at this chart now and you'll see that it was a gap up and it closed with a red bar. That means they sold the gap up, which means that there's still some selling here. And if you look at Toll Brothers, this is not telling me a great story, to be honest. It was a first stock at the 200-day, went below it, came back above it, and it couldn't hold yesterday. As I look at this now, I didn't even see this really before, and to me, actually, this might be even a little scary. It's not exactly a head and shoulders formation, but you do have defiant support. You have this resistance area. If next time it breaks below 30, this is 38. You're talking perhaps a measured move of this, which I remember I did this once with Goldman Sachs like years ago. I was like, oh my goodness, this can't be right, and Goldman Sachs got crushed. Not saying that's going to happen here, but overall, you look at the move that Toll's had, and if this support doesn't hold and gives way, could be some trouble in the home builders. Maybe rates rising is going to be a problem for this group. So we shall see. Overall, though, it's been a strong group. I wouldn't leave it for dead, but it could help give us some signs.
Right. Well, let's take a look at Lennar and see what we can pick up there, because it did pick up some buyers around 34.80, but this one hasn't even regained the 200-day yet. No.
You look here, it's actually a little disturbing. This also has some kind of triple top type of scenario where you have this, this. Just drawing it real quick, and then this was your major support going, alongside here. So you had a bounce off it, gap below, opened up yesterday, and I do believe the earnings were good yesterday. Came out with earnings yesterday, I think, and then closed on the lows. So again, that's not telling you, and that's not painting a great picture here, especially considering, look at the size of the move that it's had. So with that said, below the 200-day, the longer it stays below the 200-day, the higher the probability we can see lower prices. And if we do see lower prices in some of these home builders, you're probably going to see lower prices in the overall market, or at least, we shall see or stay away. Now, could Pulte be any different story? This one gained about almost 4% yesterday, outperforming its peers. Let's take a look. Usually groups move together. Sometimes you see relative strength. Let's see what it did, how it held on. You look at PHM. We'll see what it did yesterday. This one, closed with a little bit of a doji versus, on the dead lows. This gap down right here is still in control. Not the same pattern as the others. This doesn't have like three tops. But this too, watch the 200-day. That's all I'll say. I'm going to try and be objective here, where if it stays above the 200-day, perhaps it could act a little bit better, but if it falls right back below the 200-day, this too, has had quite a move, and it could see lower prices. So I think the home builders in the next, 5 to 7 sessions are going to tell us the real story of this market.
All right, well, we'll keep an eye on that group, but let's do some quick hits here and check in on Scott's thesis this year of going long the TBT, which did gain about 1.7% yesterday.
Yep, and it bounced back a lot quicker. That's sometimes the problem, which we saw a lot in January and February, where you had good longs, 8, 9 longs, whatever it was, and if you trim and trail out of them, you have a hard time getting into them. And a few days ago, I'm like, oh, you know what? If you've been in TBTs for this long, maybe take some off, but keep some because you might not get back in. And if you look here at the chart, you will see, this is the move where it finally broke above 70. You take a close look here, and all of a sudden, if you sold on this day, your whole position, you were like, wow, I did great. And then yesterday, you didn't feel so good as it bounced right back. So with that being said, still above the 8-day, it's still above the 21-day. Here's your new pivot. It is opening a little bit lower today. So this would be high-level support. This would be more, I would say macro support or intermediate support. Hopefully it comes down to this so we could get back in. I looked at the weekly chart before to see how much this has actually moved to be relative. Really look where all it's done so far. Look where this has been. I know it's an ETF and the decay and the whole spiel, but anyway, it still could have a lot of room here, especially if rates continue higher over the next 6 to 18 to 24 months.
Right, that thesis remains intact,
yes.
Safe to say. Well, let's check in on Tesla as well. Did take a bit of a rest yesterday, had modest gains, but it's still above its 8-day. So you think just a breather before potentially higher prices?
This has been one of the generals in the market. It's given us two-way traffic. I didn't even mean that one. A two-way opportunity for this vehicle, electric vehicle that is. But you'll see. Look at the chart. The chart just tells it all. The bears had their chance to break it when it broke this trend line, when it hit the 21-day again, which it hasn't hit in a long time. But it rallied off yesterday. It didn't have enough power to break out and go. But you didn't see a lot of names in high beta land doing that. So with that said, the longer it stays above this trend line, now above the 8-day, the higher the probability we might be able to get another trade through 105 to 107. And in my opinion, I do think that this stock could go a lot higher. Big future here. I like Elon Musk.
All right, I want to see if you're tempted at all by BlackBerry right now. It's actually shown some impressive relative strength this week and has reclaimed all key moving averages.
You know what? This one's, I personally don't believe in the company anymore, which, it had a great run. And I do remember when every time it came out with good numbers, they sold it from 60 down to 6. So with that said, over the summer, it was left for dead and it had a nice rally, went to as high as 18. And now it's in this 6-7 month base. Every day, someone on the site's like, oh, look at this little spike in BlackBerry. And there have been some trades there. But overall, I'm going to take my likes and dislikes out of it because I like my iPhone and that stock doesn't act very well either. But anyway, you take a look here. It's building a nice base above this trend line, which has been going sideways. If you remember, 2 days ago, the market was red and it went green first, giving you a nice 2-day percentage move if you wanted to be in there, and that could have been a good entry. And then here's your macro line. Okay, here's your macro trend line. There are 2 of them. One right here at around 15 and the other one coming in at 16. I did a video with the street with Deborah yesterday talking about how Friday earnings are going to come out, and there's 2 sides of a coin here because you have 32% or so of the float is short, saying that, you know what, people aren't going to have BlackBerries in their pockets in 3 years and it's a whatever. Then you have these people that have been buying it in this space. If we go back to the chart one more time, so with that said, a good report and a good guidance could lift it and could get it going. So, I don't take stocks into earnings. I trade them after typically. If you want some exposure, maybe do some kind of call spread where you buy the 15s and you sell the 17s, or you buy the 16s and sell the 18s, or just buy some options because at least if you want to be involved, your risk is premium.
Paid. Knew it was coming. All right, we also have to talk about First Solar because it did have a strong snapback yesterday right off the open and closed on highs to register almost 8% of gains. So will this be on your radar today?
Yeah, I think some people, if they wanted some long exposure, they took this home because it was up. It was actually upgraded the day before, and it just wasn't in a strong enough environment to go. So yesterday, finally, nice wide range bar. If you look here, it held kind of where it had to, broke above. you know, there's some room up to this 46.80. So I think there's some room here for people who are looking for that type of bounce. But ultimately, you know, the stock in the group, you know, lost a lot of momentum when, you know, it lost the 21-day. It was following the 8-day and the 21-day, then broke it. So now it's trying to regroup. You know, just to real quickly, you know, because a lot of guys trade Solar City too. Solar City finally had a good day yesterday. They're, you know, absorbing that big lockup. Ooh, look at that line. And here's another one. Hold on. Oh, oh, look at that. Boom. I got tools and I didn't even know it. My tool belt. Anyway, with that said, above 36-ish, you know, could see probably a move back to 40. So I do think there's still a trade left here in the solars. But, you know, with the up open like today, maybe, you know, it takes a little less out.
All right, so what do you say? We have GDP numbers coming out any minute this morning at 8:30. What will we be focusing on as the trading session begins?
Well, you know, we're up 6-7 handles, so already pre-morning call, one of my things is I sell some. Okay, so if, you know, you were I'm long some banks, some spiders, some Yahoo, I always sell a little bit to take some of the trade. And then what I do is I evaluate the open. So if today we open up above yesterday's high, which was what, 159.10, and we hold above it, maybe there's another trade that extends all the way up to the resistance that I was talking about, you know, close to 160 or 160 and a quarter. You know, at that point, I'll probably be out of majority of my longs. Okay, and then there will be some people that try and flip short. I don't know if that's going to be me yet, but you know, my trade that I was looking for from the 100-day back to where we almost are now was, in my opinion, the quick window dressing type bounce. And now for me, the market's going to have to prove that that was a summer low. At this point, I'm not sure.
Have a great Wednesday, everybody. Happy trading.